I think we're expecting 2024 is going to be a major bull run for the asset class. We just don't know how far the asset's going to run at this point of this. I don't think we've ever seen, a 2 to 10x increase in demand combined with a halving and supply in a scarce, desirable asset that people want to hold for a long period of time. So, well, I think you can't really underestimate the significance of the spot ETFs. It's not unreasonable to suggest that this may be the biggest development on Wall Street in 30 years. And then that will be followed in April with a supply shock because there are about 900 Bitcoin a day available for sale by natural sellers, the miners. And that number is going to be cut to 450 Bitcoin a day in April. So it's a pretty big deal.
Despite its history of ups and downs, Bitcoin has exhibited remarkable performance over the years. Since 2011, Bitcoin has been the best performing asset 10 times, indicating its significant potential as an investment. With the recent introduction of Bitcoin spot ETFs and its surpassing of key resistance levels, there's a growing interest in Bitcoin among both seasoned investors and newcomers to the cryptocurrency space. The current price of Bitcoin is around $51,000, and many experts anticipate further price increases in the coming months. Michael Saylor, a world-renowned entrepreneur and co-founder of MicroStrategy, remains optimistic about Bitcoin's performance in 2024. He foresees a substantial surge in demand for the digital asset this year, driven by its scarcity and desirability for long-term holding. Saylor highlights the significance of Bitcoin spot ETFs, which simplify Bitcoin investment for various investors and add legitimacy to Bitcoin as a valid investment option. Looking ahead, Saylor predicts a supply shock in April following the Bitcoin halving event, where the daily supply of newly mined Bitcoins for sale will be reduced from 900 to 450. This reduction in supply, coupled with stable or rising demand, could lead to a supply-demand imbalance and potential price increases. Now let's delve into some clips of Michael Saylor as he explains the significance of Bitcoin and why its surge in 2024 is expected. As we share these clips, we kindly ask for your support. Please consider giving us a thumbs up, leaving a comment, and subscribing to our channel. Your engagement motivates us to provide engaging updates on cryptocurrency finance. We hope you enjoy the clips.
Well, I think a lot of this is just indicative of the popularity of Bitcoin as an asset class. It's now the world's most popular investment asset. It's novel, it's digital, it's global, it's unique. And it's uncorrelated to traditional risk assets because it doesn't come with exposure to any given country, currency, company, quarterly result, product cycle, competitor, not to weather, not to war, not to an employee base or supply chain. And so that makes it a natural addition to the portfolio of a responsible investor. There's 10 years of pent-up demand. People have been waiting for these ETFs. And finally, mainstream investors are able to access Bitcoin. And I think that's what's driving the surge of capital in the asset class. And initially, there was a rebalancing as people were moving capital between the futures market and the miners and MicroStrategy and the ETFs. But following that rebalancing, I think the assets found its footing. And now people are beginning to realize that there's 10 times as much demand for Bitcoin coming in through these ETFs as there is supply coming from the natural sellers who are the miners. Bitcoin is digital property. It's conveyed by digital power. Those Bitcoin miners are digital power providers, and it's the most powerful computer network in the world. So we see this as profound because there's hundreds of trillions of dollars of wealth in the analog world. And there's no doubt it's decaying. Bonds are losing value because of inflation. Real estate's losing value due to just physical decay. Stocks lose value because of competition and product cycles and acts of God. And so the people of the world, they're looking for a new idea. And Bitcoin is this idea of put your money in cyberspace where it's not going to be affected by weather and war and supply chains and all of the things that have plagued us in the 20th century. No, there's a lot of uncertainty around the rest of the crypto ecosystem, but the one certain element of the ecosystem is Bitcoin is universally acclaimed to be a global commodity or an asset without an issuer. So the one thing we can count on is Bitcoin goes forward in the year 2024, and a strategy built around Bitcoin is generally a pretty safe one for institutions. Bitcoin's got a compound annual growth rate of 40+% over the past 4 years, and even higher in the more distant past. So having a digital money like Bitcoin as a treasury reserve asset allows you to beat the cost of capital, and it turns your balance sheet into an asset instead of a liability. So we think this is a real game changer for corporations. Bitcoin represents the digital transformation of capital. 99.9% of the capital in the world is tied up in real estate and stocks and precious metals and bonds. And so we're 0.1% transformed. People, as they get educated on digital assets, are realizing that they ought to be allocating more and more of their capital to this digital asset. And so they're moving from 0.1 to 0.2%. And I think that's really driving the trend. I've said before, if Bitcoin's not going to zero, it's going to 1 million. The real question is it legitimate asset? If it's a legitimate institutional asset, everybody is underallocated to it. They're all factors. Education makes a difference. Institutional adoption makes a difference. The spot ETF news is good news. Loosening of monetary policy is good news. Inflation anywhere in the world drives Bitcoin adoption. And of course, the halving is going to cut the available supply of Bitcoins for sale in half from the miners. And so we've got a confluence of very bullish milestones over the next 6 months. And I think smart money is investing into that ahead of it.
In a series of compelling statements, Michael Saylor emphasized the profound significance of Bitcoin as a potent force for change in finance and economics. Saylor drew parallels between economic energy and wealth, emphasizing that Bitcoin represents a digital evolution of capital compared to traditional assets from the past century. He pointed out that money is transitioning from traditional forms to digital ones, largely due to Bitcoin's appeal as a secure investment that appreciates in value over time. Unlike stocks, bonds, or commodities, the supply of Bitcoin cannot be increased to meet rising demand, making it inherently resistant to inflationary pressures. Saylor also clarified Bitcoin's classification as a crypto asset rather than a currency, highlighting its role as a store of value similar to gold or real estate. While governments may regulate its use to ensure tax compliance and prevent illicit activities, Bitcoin's inherent anonymity provides individuals with a level of privacy and autonomy in their financial transactions. Let's delve into more clips of Saylor as he elaborates on this crucial information.
Economic energy is capital. Economic energy is wealth. And so if you think about the wealth in the world, there's maybe $900 trillion of it right now, and it's tied up in real estate, in stocks, in bonds, in currencies, collectibles, etc. The challenge is that that capital is analog capital from the 20th century, and Bitcoin represents the digital transformation of capital. And your chart you just showed with those ETFs shows that every day in the last 5 days, $481 million is flowing out of the analog world into the digital world. And what's going to drive Bitcoin is, in essence, the conversion of analog capital to digital capital. The killer use case is capital preservation and capital appreciation. And the currency is to the economy what your blood is to your body. And economic energy or money is to the currency what oxygen is to your blood. So common sense says if I keep sucking the oxygen out of the room, if I suck the oxygen out of the room, you're going to either suffocate or freeze to death. And if I keep sucking the economic energy out of the currency, the economy collapses. In the extreme, you get ripped back to Stone Age barter. Right, when the money doesn't work anymore, I have to trade you cigarettes for bullets. Right. And the problem with that is the economy becomes 1 million times less efficient, right? If you don't have money, now how many countries in the world have a collapsed currency? 66 are dollarized. There's 180 about countries, there's 130 floating currencies. All of them are weaker than the dollar. The dollar is weakening, okay? It's like the oxygen is getting sucked out of the room. So Tucker, if I told you the oxygen is getting sucked out of the room and there's an oxygen mask drops out of the ceiling over there, what would you do?
Run for it.
Yeah, Put the oxygen mask on. With every other asset on Earth, anything else you can own, houses, gold, silver, commodities, stocks, bonds, when the price goes up, the supply increases. If I increase the price of any stock by a factor of 10, the company issues more stock.
Of course.
If I buy all the bonds, all the municipal bonds, the price of bonds go up, people issue more bonds. Right? If I drive up the price of gold by a factor of 10, people print more gold or mine more gold. Bitcoin's the only thing in the world that's inelastic to price. If the price of Bitcoin triples, you can't make any more. If the price goes up by a factor of a million, you can't make any more. There's a kind of misnomer. People often call cryptocurrencies currencies, but it's not a currency, it's an asset. It's a crypto asset. So you're right, Tucker. If the government thought it was a currency, and if it competed with the US dollar or other currencies, then they would take offense and they will suppress it. But on the other hand, if it's viewed as an asset which competes with gold or with index funds or with bonds or property or real estate, just a store of value, or silver, then you can hold S&P index funds and bonds, and you can own land and you can own property. The government would simply like you to disclose when you sell it to someone else at a profit and pay your taxes on it, capital gains tax. And if you wanted to wire $100 million worth of property to someone else, they probably want you to disclose that per the AML, KYC. Can be owned anonymously, except as a practical matter, if you want to acquire large sums of it, you have to acquire them on registered exchanges.
Bitcoin has surged to $52,000, igniting a similar surge in interest in altcoins. Consequently, the total cryptocurrency market value reached $2 trillion last Thursday, a level unseen since mid-2022. Many experts, including Michael Saylor, attribute Bitcoin's recent surge to the growing interest in investment in ETFs. Inflows into Bitcoin ETFs have surpassed $2.2 billion in the past week alone. In light of this influx of investment, it's crucial to stay informed by monitoring trends, news, and updates to make informed investment decisions. Understanding the factors driving Bitcoin's value increase, such as the rising use of ETFs, can aid in predicting future trends. While the rise in Bitcoin's value is exciting, it's essential to recognize that markets can be volatile and prices can fluctuate rapidly. Conducting thorough research, understanding your risk tolerance, and investing only what you can afford to lose are essential practices. Despite occasional fluctuations, the outlook for Bitcoin remains promising, with ongoing technological advancements and increasing acceptance. By staying informed, diversifying investments wisely, exercising caution, and thinking long-term, investors can position themselves for success in the dynamic world of cryptocurrency. What are your thoughts on Bitcoin's current status and potential for future growth? We invite you to share your insights in the comments below. Thank you for joining us as we explored Michael Saylor's insightful perspectives. If you found this video helpful, please consider giving it a thumbs up, leaving a comment, and subscribing to our channel for more updates on cryptocurrency finance. Your interest and engagement inspire us to continue delivering informative content. We appreciate your support and look forward to sharing more insights with you in the future. Until next time, happy investing.